What is going on with Ethereum? The market as a whole is expanding and Ethereum did see a nice bounce in the last weeks. But recently, in the last few days, this rally seems to have halted. Let's have a look at what's behind all of this. Let's have a look at the data most people are not considering. Let's see how much higher Ethereum could go, but also let's look at the risks. Now, you see over here, that's the stablecoin market cap starting in 2022. And we had our Terra Luna collapse. So this is where the bear market started. Then during that bear market, FTX also went belly up. And since October of 2023, we tend to see money flowing into the space again. We are 37% higher than the peak of May 2022. Now, Ethereum was not able to claim new all-time highs. So this is just a US dollar chart of Ethereum. And since the middle of 2021, we tend to go sideways. Now here's the price bounce, this rally of 75% that I mentioned at the beginning of this video. But now things seem to slow down. Are we going higher from here? Are we going to see a continuation of this rally, or was that it? I of course don't have a crystal ball either, but there is useful data to look at. Now here is what explained the recent bounce. This is the Ethereum dominance, and we actually anticipated that rally. Talked about this several times on this channel. Feel free to check out prior videos. But what the Ethereum dominance is showing us is how much of all of cryptocurrency's market cap is in ETH. And that tends to trade somewhere between 21% and 7%. And when we were at 7%, we aligned with the historical bottom of September of 2019. Now, just based on this chart, there's still a lot of further upside, right? The potential upside is 50%, maybe 130% versus the potential downside, only 22%. But why are we suddenly not going any higher? What's causing this sudden interruption? I think the market is taking first profits. Now, not necessarily just in Ethereum, but mainly in Bitcoin. Bitcoin is now very close to a historical resistance line, the 111K in BTC. I believe that at some point we will go above that, but right now people are taking profit. And that, of course, per extension also translates over to Ethereum underperforming, because Ethereum is still somewhat of a levered version of Bitcoin. Ethereum does have more volatility. So in general, if the market is going up, let's say Bitcoin appreciates by 5%, Ethereum, with all factors being equal, should appreciate a bit more than that, maybe by 7, maybe by 8%. But here's the problem with Bitcoin. Bitcoin is now bouncing off the 111, 112K mark. Now, why is this such an important resistance? This shows Bitcoin over the very, very long term. And we are now just interested in the top line. This is by no means scientific. It's just a curved line. But interestingly enough, even if we zoom in on the very precise points along this line, those tops, for whatever reason, touch this resistance extremely well. And so we've never come above that line. And so that's why it's so important. People are taking profit. And while I do believe we will cross that line at some point because money continues to flow into the space and there's still a lot of stablecoins on the sideline that haven't yet been deployed, despite all of that, I think it's only reasonable to at least temporarily rebalance the portfolio when the picture looks like this. Just imagine you had no stake at all in crypto. You don't have any Bitcoin, any Ethereum, any altcoins whatsoever. You come in as a newcomer and you see this chart. Would you really be that hyped about buying at those prices? I think if we try to be as objective as possible, the answer is no. And so despite all the big money coming into the space, despite institutionals getting into Bitcoin, seeing some profit taking is just reasonable. And then as per extension, Ethereum dominance also has a hard time to climb, simply because there is some correlation and some inherent leverage in Ethereum relative to Bitcoin. Or the term in traditional finance would be that Ethereum has a high beta. It's got a beta above 1, with 1 being Bitcoin. Now, what about the usage of Ethereum though? If we zoom a little bit out, what we've got over here is the total value locked in decentralized finance across all chains. So how much capital is deployed, not just in Ethereum, but also in Solana, in the Binance Smart Chain, in Arbitrum, etc. How much capital do we have across all chains? And interestingly enough, this does, of course, fluctuate. We had our DeFi summer in 2021, then the massive collapse in 2022 that started with Terra Luna, and then since October of 2023, the recovery. But we are not yet at an all-time high. Again, this is across all chains. Now compare compare this with Ethereum, that's the chart. It looks pretty much the same. There's rarely any difference. Now, one might make the argument that of course those charts look the same because crypto is highly correlated, right? When crypto is going down, it all goes down at the same time. But there are some idiosyncratic moves. So again, this is the Ethereum total value locked over time, but compare this with the Binance Smart Chain total value locked over time. It did not recover as well as the rest of DeFi. Well, have a look at Polygon. It's even worse. Solana did hit a new all-time high. So that was mainly because of Memecoin trading and the Pump.fun ecosystem. And so let's just have a look at the relative standing of Ethereum within all of DeFi. And so that's this chart over here. Blue is Ethereum. And this big move that we see over here, that was the Terra Luna collapse. But before Luna collapsed, Ethereum had a dominance in terms of total value locked across chains of roughly 50%. Now it is at 54%. So it actually even gained some market share. But since April of 2022, the Ethereum dominance fell massively by 54%. So within decentralized finance, it's even more important looking at those two data points, right? 3 years roughly. But in terms of its valuation, it collapsed massively. Now, why is that? The Ethereum dominance, of course, measures how important is ETH within all of crypto. But there is Bitcoin that outperformed the rest. Here is Ethereum relative to Bitcoin. And this arrow over here, that's the move from proof of work to proof of stake. And I believe that that transition was at least, quote unquote, short term, a mistake. Because even though the tokenomics of Ethereum improved, as in there was less additional supply hitting the market, problem is that the constant stream of new adopters also stopped. The reason why Ethereum was so popular is because everybody could mine ETH just with a GPU at home. And so if you did this, right, if you just mined some Ethereum and you got that Ethereum for free just by selling your electricity, you then also use the Ethereum ecosystem, right? You tried out some DeFi protocols, etc. All of those new adopters that came through the mining completely stopped. There was no new people coming into the space. And that's probably what caused all of that decline. Now, a second reason is, of course, Bitcoin doing phenomenally well. And that was at least partially driven by the Bitcoin ETF adoption. The holdings measured in ETH in the Bitcoin ETFs is at an all-time high. And yes, Ethereum does have an ETF as well, but it's not getting adopted to the same degree. It's not at an all-time high. Traditional finance just wants to get exposure to Bitcoin. They just want to set and forget. They don't want to play in the ecosystem that much. And since Bitcoin tends to outperform most assets most of the time, and since there is a good likelihood that it will stay around for the next 10 years, which we don't necessarily know that certain for Ethereum, that's why Wall Street just gets into Bitcoin and forgets about it. It's similar to just an allocation to a stock ETF, to VOO or the like. And so yes, there is a good case to be made that Bitcoin over the very, very long term can still outperform Ethereum because Ethereum does have a lot of competition. But Ethereum, in my opinion, is extremely cheap now, even relative to the altcoin. Because here's the thing, many altcoins are traded versus Ethereum. Their capital is directly bound in liquidity pools with Ethereum. So when Ethereum goes down by 10% in US dollars, the altcoins go down by 10% in US dollars as well. It's just the ratio of wrapped Ethereum versus the altcoin that determines the price. So have a look at this. This is the Ethereum chain, and all of those altcoins are traded versus wrapped ETH. So the ratio of those two assets is what determines the altcoin price. And when wrapped Ethereum goes up by a certain percentage point, then the altcoin automatically goes up to the same degree. And that's not just true for Ethereum, it's also true for all the layer 2s, right? This is the base chain. Many of those altcoins get traded versus wrapped Ethereum. Here we've got Arbitrum, same thing. Here we've got Optimism, same thing. And so really, if we take out Bitcoin from the equation, we have to look at Ethereum's share relative to the altcoins. Are people currently mainly in altcoins or mainly in Ethereum? Is there some kind of stable trading range? The answer is yes, it's shown over here. What we are looking at is the Ethereum market cap relative to the market cap of others. Now, what does others mean? It's all the altcoins that are not in the top 10. And it looks like when Ethereum is roughly double the size of the altcoin market, it might be expensive. When it's got the same size as the altcoin market, it tends to be cheap. And this was a trading range that's pretty stable since 2018. And this really shows how much the market is currently risk on or risk off. and I believe Ethereum has a good chance to outperform the altcoins by roughly 100%. Long-term, ETH is still getting used. It even gained some market share. And here's the number of transactions on the Ethereum chain. And if you're now saying, okay, the number of transactions is up because of all those automated arbitrage bots, etc., and this is just a few wallets creating thousands of fake transactions, then I tend to disagree. Here's the number of active addresses on Ethereum. Still, it tends to go up over time. At least it's not shrinking. Now, to a degree, the crypto market is just a reflection of unregulated life. As in, most gains come just to a few people, to a few assets. The vast majority tends to lose. So if you're just taking a broadly diversified portfolio of assets, we're likely going to not perform that well. Because here's the thing, crypto does not have any regulation. Everybody can launch a coin, and so there's no real barrier to entrance. And because of that, we tend to see a lot of fraud. We tend to see a lot of setups where tokenomics are rather poor, so where the average investor tends to not make money. And so when crypto cannot create money out of thin air, when it's actually a sophisticated system of moving money from the not so well informed to the better informed, then how can we become better informed over time? Because surely there's also a luck component involved, but there are some people that tend to win long term. Now, it's obviously not easy to become part of the minority. If we are not launching a project and we know more than the rest about that project, then how can we still become insiders? I think the best answer is to try to figure out what the insiders are doing and then simply copy trade them. For example, over here, we've got the Martini guy, and he bought the Chippy token when the market cap was still at $455,000. Now have a look at the comments on that wallet signal. The Martini guy tweeted about Chippy 2 hours after he has bought himself. And so since we are in a market without much regulation, and since we are in a market that does not produce any wealth, it's just transfer from one to another, it's all about figuring out an unfair advantage. And the unfair advantage of Martini guy is to simply have a following, right? He's just buying and then he tweets about it, and then the price goes up by more than 50% in just a few hours. Here's, by the way, his YouTube channel. He's got 150,000 subscribers. And so when we know what the insiders are doing, when we know what the influencers are doing, we can replicate those trades. Now, the art is in finding the right wallets. And we are tracking 12 wallets of Martini guy. In total, we are tracking more than 500 wallets. So 12 are by Martini guy, but we've got a lot of other influencers as well. For example, check out this signal over here. This is YouTuber Jesse Eckel. He bought $10,000 worth of the winner token on the 2nd of May. And surprise, surprise, on the 6th of May, he published a video about the winner token. And so, of course, the price also appreciates in the top by almost 50%. And so really, it's a game of attention. It's not a game of fundamental analysis. Most YouTubers, they simply just buy the asset and then they promote it on their channel. And then later on, they might sell it at a higher price. Don't get distracted by all the noise. We're also following Alex Becker, for example. So we've got 12 of his wallets. We are tracking Crypto Banter. We've got 33 of their wallets. And here we've got Brian Young, who, by the way, bought the virtual token extremely early. And we've got 5 of his wallets. So how do we get all of that data? How do we know what influencer holds what kind of wallet? And how can we then create those signals that we can actually buy and sell with them? The answer is through on-chain analytics. So there are several approaches. We can, for example, look at what kind of NFTs does somebody hold. We can then see, are there maybe potentially deposit addresses on centralized exchanges? Did other major deposits happen to the same kind of wallet? Are those wallets potentially connected? We can also look at prior purchase histories. So let's say we've got an influencer that talked about very small altcoins in their Twitter or in their YouTube. And then we look at wallets that held all of those altcoins and that potentially bought them also before the tweet or before the YouTube video. Then we've probably also got the right wallet. We can then afterwards confirm this, right? We can look at what is the wallet buying next. Is there again another tweet or another YouTube video on this? If the answer is yes, it's probably the right thing. We we are then continuing to track it. And so I've made an entire video playlist on how to find different wallets and how to track them, how to then get the signals and how to interpret the signals. And so our entire community is trying to find new wallets, discussing this in the wallet research channel. And then once we found an agreement, we add this to our influencer trade tracking channel. And so the idea is pretty straightforward. We're trying to generate as much outperformance as possible that in the end, the membership more than pays for itself. Now there is some funds needed, right? We can't just trade with a few $100. I think the best portfolio has at least $5,000. Once you are at 5,000, you should be able to make that money back. Now, if your portfolio is larger, then you can consider to potentially sign up for yearly as well. First of all, there's a discount involved. So there's $250 off. But secondly, there's also a 1 hour free Zoom call. So in case you've got a larger portfolio in crypto, but also outside of crypto with other asset classes, and you could benefit from a direct one-on-one call. The yearly membership might be for you. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.